Hi everyone, and thanks for checking out my channel. I'm going to continue the review I've done last week, just checking on the global picture about the market, because I think we are at a really key level where either we're going for another leg to the upside or breaking down lower to clear up some divergence that we're having here and there, and to cool off some indicators before potentially resuming the move to the upside. So starting with the S&P 500. So last week we closed the week on Friday, the week before, sorry, just right on the trend line here. So that level was at 3,800 and it was respecting the 50 MA once again. We had a nice pull back to the upside, reaching 3,900. Then we got a significant move to the downside, 3 days with increasing size, red candle, and we broke through that 50 MA, broke more importantly under 3,800, as we can see here, and we didn't see any, with a powerful momentum here, as we can see on the RSI. So on Friday we got some move to the upside and pull back to retest that trend line. So of course the question from here will be either that was just a retest and we're going to see resuming to the downside on Monday, or potentially a bit later, Tuesday potentially, or we are going to see a move to the upside and break for good 3,900 to set a new touch on the RSI trend line. And of course that will mean we are potentially getting to 4,000 points on the S&P 500. Not my favorite scenario, but of course very much possible. We had a really strong close on Friday, just a little bit annoying that didn't actually manage to break back inside the channel. So we'll see on tomorrow where we go and how it will look for potentially the one scenario to the upside or the other one dropping down. Target still 3,500 to cool off indicators and getting check out on that daily divergence, and the 200 daily MA that's also running there should provide some good support. If we look at the Treasury Bonds, with a significant move down and a break, I think that one had happened last week already, retouch on the trend line and another push to the downside. So we're now setting some sort of divergence in oversold, so potentially we could see another bounce to the upside, but my opinion is that it's going to be limited. Something to notice is that on Friday we got that here, a small green candle on both Fridays. I believe the Fed is actually attempting to cool off rates by buying a lot of these treasury bonds to trying to give some support to the market. So far it's been a little bit unsuccessful. It's maintaining the level here, but it broke down and the momentum is accelerating. So that doesn't look extremely well for what will continue, and that doesn't actually support the S&P 500 continuing to the upside. But yes, that's more of a bearish thing, but it could of course bounce from here. We could have another green candle on Monday, and we will need to break inside this and break, more important, above that level. That's going to be, in my opinion, very difficult for now. If we look at Euro US dollar, very much similar. We got finally that breakdown last week inside that very large reversal pattern we're having here. That's on the daily. We're having that really big trend line here. That's actually pointing to a correction that will likely go to 110. Actually hoping for a little bit lower than this inside that range, but of course will not happen like this so quickly. So for now we didn't retest the previous support area, so we got some sort of a fake support at 120, but the big one is more likely at 122, 120.202, and looking at this, we could have another move here, trying to exit a little bit out of that channel, or we would actually continue to the downside and reaching there by the end of March at 1.15. Of course, that's also pointing to continuation on the downside to the S&P, as the USD getting stronger will definitely not bring any support to the market. If we look at gold, same story. We broke key level as well. I think that breakdown did happen the week before. We didn't manage to actually recover from this. We can see powerful momentum on the daily, getting a little bit oversold, but there's still room to go to the downside. The 4 hours is showing sign of exhaustion from the sellers inside the falling wedge, so potentially we could have a bounce from 1690, but we would need to confirm a break outside that level, 1700, for continuation, which I think will be limited. Potentially we could go as high as 1770 for a retest of that previous support before resuming to the downside until the target that is still 1500. So also pointing potentially for the market to continue to the downside, but gold is very weak recently, breaking a very important level here that doesn't actually look very much positive. If we look at Bitcoin, it is giving a little bit of a speculative view where the traders are actually positioning. We can see on the daily and more that we're still having that divergence, of course, that's actually pointing to a deeper correction, still looking at 30k as a potential end of target, but for now the price has rebounded quite strongly inside that handle and potentially attempting to make another top 52. Okay, so from that level it will be very important to see either it goes through it and it does actually attempt to make another double top at 57, 58. That would be another touch on the RSI trend line on the daily, or rejecting from that level and retesting 45, then we would be looking at some potential breakdown that could actually accelerate the move to the downside. So not doing anything on Bitcoin now. I think it's way too risky to buy that configuration here. Of course it can continue higher. There's some potential to get another 10-15% to the upside, but the risk to the downside is significant from 50, and even your stop loss getting there, it's just too far away to actually trade this for me. Now I'm looking also at crude oil, as it's some sort of give an idea about the economy and how the market is positioning and the traders, but still it's been manipulated quite strongly recently by the OPEC constraining supply. So of course it's actually changing the game a little bit. As we can see here on the daily, we are not trading still that very large divergence here. That's not been cleared, my opinion, but still the price did actually bounce on 60 on the 20 MA and did actually manage to reach as high as 66 on Friday. So that's definitely a strong close. Are we going to break that level? Well, that's the question. And here, as we can see, we are getting really close to the trend line, and we know that WTI tends to respect these trend lines quite well. I think we had one previous example was that really rising wedge, and we had from here, and as we can see on many occasions the momentum did actually stop the move to the upside here, and it couldn't actually push through much higher before correcting and clearing up finally that divergence, dropping to 34. So the clearance of that divergence, so we look at there, it would be a clean drop around 58, potentially 57 to clear it up a bit more. But yes, at the moment it's still looking strong. Should it actually break above 67, that's probably safe to not keep any short positions. It could definitely shoot higher. This is a very key resistance area that will be hard to break. I don't believe it will break in one go, but of course it's always a possibility. Now looking at the quote report, I'm checking the oil rapidly. Of course it's been taken during significant drop. We had a few days to the downside when we reached 60, so not surprisingly we can see that the managed money did actually increase long but also increased short, so quite neutral, but we could see a solid open interest during that drop. Not much else, some short reduction here, and we could see that in terms of the edges they're quite neutral as well, also reducing a bit more the short position, limiting the potential for edging against higher price. So yeah, not really sure where this will go, but it's definitely overextended. That kind of divergence here on daily is usually pointing to some more serious reversal, but not proper reversal in my opinion. We're going to stay near that channel somewhere and not breaking much lower at the moment. There's still many things supporting the price. And if finally we just look at the back of gold, something quite interesting. We had almost aligned positioning from the smart money on the metals. Apart from palladium, that's resisting quite well, we could see that platinum has been heavily reduced in terms of the long loading on short. That's not been the case for quite some time. On platinum, we can see silver as well, that's been shorted heavily and reducing of long position, and we could see that gold, same, significant number of long contracts has been also reduced, adding to short position as well from the smart money. And even copper has been very strong recently, has seen the long position reducing significantly and the short increasing. That wasn't the case for quite some time. So yeah, it will be very interesting to see what will happen next week. The key thing to watch, in my opinion, will be the yield on the long-term Treasury bonds, for the reason that these rates are really hard to control for the Fed. They can only actually continue to buy the bonds, but if there's some tension, if the liquidity, the yield will continue to push higher. There will be some sort of indication that the liquidity is missing somewhere. We are stretching the limit in terms of increasing debt, and of course that's an extremely bad news for the market, because the market at the moment is moving only because debt is created, and that debt is converted somehow to some cash or QE or whatever to actually keep pumping the market higher. So very artificial, can continue for a long time as long as the US can continue to raise enough money, or the Fed can buy enough bonds to actually flood this with enough liquidity. Should that not be the case and interest rate starts to actually increase, will cause a very big problem. As we can see here, the limits or the really big support we're having on the Treasury bonds inside that very large channel. So that's a 40 years channel, rising channel, so it's very strong. It's sitting very far away, somewhere at 140, so that's almost another 10% drop, which means an increase in terms of the interest rate that will be barely sustainable for the stock market. So we will see. Should we see some stop here and the Fed managing to actually hold these rates and stop them to increase, and then it will be some relief for some time, or we are going to see some continuation to the downside that way. That could have some impact, quite important and significant, especially on the US dollar, but of course on the stock market as well. So thanks for watching. I attempt to keep track of this midweek, but a bit hard for me at the moment. Otherwise, you can still follow me on my WhatsApp channel when I'm sharing trades and a bit more info. And yes, until then, I wish you safe trading, and I speak to you soon. Cheers, bye.